I'm Mehdi, and welcome to Your Finance TV's Crypto Revolution, where we cover all things in crypto and digital assets. Adam from Interaxis, welcome back.
Good to be back, Mehdi. Good to talk a little crypto. We've been off a little while, but news keeps coming.
We have, it feels like a long, long time since we last spoke about anything. So I'm glad to have you back, and I'm glad to be talking about all things crypto.
Let's do it.
So it's been a bit of a weird couple of weeks. I guess the last main topics of conversation have all been around, the Bitcoin ETF, the launch. We were all expecting it go to the moon, and things kind of sold off, and then we got a bit of a breakdown on why things potentially sold off. But things seem to have kind of stabilized and are ticking up a little bit on the Bitcoin side. I think probably around 47,000 as we record this. But that's not really what I care about right now. Let's talk about something else. But January, there was an article out, an interesting article about Bitcoin production dipping in January, and this was based around energy issues. The miners were basically they didn't produce as many. They didn't. Their Bitcoin production was down. Have you been seeing any of this? Have you been speaking to guys that are kind of raising their concerns? Like, what
No,
does this mean?
well, what we had, remember, in January was we had some pretty nasty winter storms, right? Some unbelievably cold storms. And when that happens, I know from where I come from in Texas, the Bitcoin miners kind of have a deal with the state government, of course, because Texas is on its own electrical grid that says when we really need the power, you guys have to turn your miners off. And when it's either extreme heat or extreme cold, is when the state really needs that power. And so a bunch of those miners had to turn their miners off and sell that power. And when Bitcoin miners, when those machines are not working, you're not producing Bitcoin. So production was down a little bit. And I say that in Texas, it was like that all over the US, right? I mean, we had nasty winter storms that caused a need for more power to go into homes and into businesses and hospitals and every place else we really need power. And the miners just have to shut off. And in some places, I think, Mehdi, like I saw pictures where it was so cold that the miners were just frozen. And I think there was no amount of heat that was really going to help. I mean, you saw what the temperatures were like and what those storms were like in January. So there was less Bitcoin production, especially from those publicly traded or most of the miners in January. But that doesn't really affect it shouldn't affect really the value of Bitcoin a whole lot. The only difference is for some that especially the ones that are not in Texas, they still have to pay their bills, right? So if they didn't produce as much Bitcoin, but they still have to sell Bitcoin in order to pay their bills, they don't have as much to sell. And we did see in January the price go down, right? Part of it, as we talked about ad nauseum, was GBTC selling. But part of it we talked about also was miners having to sell some of their Bitcoin, partially to get ready for the halving, but partially because they just didn't have as much.
So it all kind of ties together with the story of what we were discussing, and these are all a little bullet points, which I personally think are quite valuable when you're trying to do a post-mortem on understanding your asset class a bit better. You're like, okay, now I understand why there was that sell-off after the inception of the ETFs and such. We've got all these bullet points that kind of tie together, and it's like, all right, that all makes sense now. So yeah, I'm sure there'll be more information that comes out over the next several months and stuff that highlights even more. So it's all a learning curve, and you know what, Adam, that's all we can do is learn about these things. Actually,
Exactly.
while I say that, is there anywhere someone can go to learn about these things?
Yeah, well, there's a website, interaxis.io. If you want to learn about it, we have courses teaching you about Bitcoin, about crypto, about Bitcoin mining. So we talk about that and how it's so interesting, the interplay of miners, which are companies and physical pieces of physical computers with the asset they're producing, which is 100% digital.
Fantastic. Well, go check it out, interaxis.io. So, Adam, while we're talking about Bitcoin, I know we're going to talk about other things in today's show, but while we're on the Bitcoin side of things, have you heard of, I don't know, Kitria, how is it, Citria? So they're kind of enhancing the capabilities of Bitcoin block space with zero knowledge technology. So can you talk to us a little bit about this, what this is? Because this feels like a new development in this whole ecosystem.
Well, I think, Mehdi, so you have the Bitcoin network, right? The Bitcoin network is the safest, most secure network we've at least had in quite a while, right? It's been operating for since January of 2009, hasn't had a hiccup, hasn't had a hack, hasn't had an exploit. And yes, it creates this asset called Bitcoin that you and I can then send to each other. And the main purpose of the Bitcoin network was to be able to send Bitcoin back and forth. But what it turns out is we want to be able to create other financial transactions, number one. And that's where Ethereum started, and we moved into DeFi, which says we need to have programmable money. We need to be able to create other systems on top of this network. But there are so many in the world that want to create those systems on top of Bitcoin because it's the safest network, because it's the most secure, because it's the most decentralized. There's no Bitcoin company. There was no initial token offering or anything like that. There were no VCs with actual Bitcoin. So there are plenty of people that say, I want my applications or I want money to move on top of the Bitcoin network because it's safer, more secure, more decentralized. But there's a limit on what's called block space. Right, every 10 minutes, there's a block of transactions processed, and we're getting to the point where there's a fight to get space in one of those blocks. Meaning, my transaction of sending Bitcoin to you, I want it to happen on the next block, so it's settled, and there's just not that much space available. Each block is only 1 MB of data's worth of space, which is not a whole lot. So what we're seeing is this race on the kind of Ethereum, Solana, DeFi side to build out all those decentralized finance applications. And then on the Bitcoin side, they're going, we're the safest, most secure, but we don't have the programmability in the space. So you see, companies like this one called Citria that's building zero knowledge rollup. So basically, it's how can we make the transactions much smaller, such that we can then put them on the Bitcoin network, on the Bitcoin blockchain, and have it be part of that block space. That is where we're seeing some development, some investment in teams that are building decentralized finance type applications on top of the Bitcoin network instead of on top of the Ethereum network. Because it's look, I can either memorialize my trade or my transaction on the Ethereum network or the Bitcoin network, and the Bitcoin is just a little bit safer, more secure, more decentralized, or at least that's the thought from a lot of people. So you have teams, you have projects that are trying to build, kind of a financial system on top of the Bitcoin network, which is not as easy again because there's no company behind it. It's harder to change the code. There's only a block that is processed every 10 minutes. It's not like Ethereum, which is every 12 to 13 seconds, or Solana, which is every millisecond. It's every 10 minutes. You have to get your transaction in that 10 minutes. How are you going to find space for that?
All very interesting. And it's kind of, it's bringing utility to something that's always just been as a store of value, right? And that's, a lot of people have been sitting there saying, well, what does this thing get used for? Well, there's a bit more of an argument now as well. So in your box.
Exactly. Yeah. And there was a company called Portal too that raised $34 million to build like a decentralized exchange on top of the Bitcoin network. Right? Because so many people want that. They're going, we want to be able to transact. We want to be able to use this safer, more secure network. I think the decentralization part is huge because it means that it's censorship resistant, meaning the government can't shut it down. And we've always said that's a huge part of Bitcoin that really no other network has. There's no one person or group or government that can really shut it down. And therefore, it's important to have decentralized finance type applications. If I'm going to be sending Bitcoin back and forth to my family in South America or something, they need to be able to do something with it. They need to not just hold it, but actually do something with that Bitcoin. And that's where there's this kind of race to build those applications.
So it's, that's awesome. I'm actually kind of excited to see this whole development in Bitcoin and the Bitcoin universe and ecosystem. Where it ends, who knows? Whether it's got capacity, who knows? But it's all very cool to see all these things kind of transpire.
Right. And I think honestly, Mehdi, it adds to the potential value of Bitcoin. Not that Bitcoin needs it, but if Bitcoin becomes a network where all you have is guys like Michael Saylor holding ungodly amounts of Bitcoin, then what's the purpose of the network? What are you actually doing on it? How, if you and I can only get tiny, tiny, tiny pieces of it, and and there's no transactions on it, then what's the purpose? And so this is basically saying, okay, there's going to be a purpose to this network other above and beyond mining more tokens and just holding on to them.
That's it. Well, we'll see how it all pans out. Ethereum. So Ethereum is obviously the next one that everyone's looking at for the ETF approval and such. A couple of things that have transpired over the last few days or weeks, or whatever, since we last spoke. ARC21 shares have amended their spot ETF proposal. I think it's something to do in the staking language. And how do we feel like things are going? Because there's now been speculation that we might see an approval on May 23rd. I don't know if that's because it's my parents' wedding anniversary or if there's another reasoning around that date.
Might be that, it's also my dad's birthday. So I
There
think
we go. That's what it is. That's where it's all come from.
yes, I knew my dad, who has no concept of crypto, is going to play into this somehow. So I'm really happy for that. And your parents as well. I'm sure they're holding just a ton of ETH.
Yeah,
And
they're all over it.
Yeah, a nice wedding gift for them. A nice anniversary gift, Mehdi, is give them some ETH. So yeah, so May 23rd is that, back in January, right? We had the January 10th kind of drop dead date that the ARC 21 shares fund had to be either approved or denied by the SEC. And we knew that if they approved that one, they were going to approve them all. So I think we have the same thing coming May 23rd. I believe it might be the BlackRock or Fidelity ETH ETF application that's kind of that date where the SEC has to either approve or deny. And so they're likely just going to either approve all ETH ETFs or deny all ETH ETFs by that date. And so that's May 23rd. I think you're referring to Standard Chartered coming out and saying, kind of sticking their finger up in the air and going, we think it's going to be May 23rd, when in reality, like that's the date that it has to be decided. And what we've seen from the SEC is they're going to wait until the last possible moment to make that decision. You're referring also to, ARC and 21 shares that amended their application. And part of it was to potentially include staking in the future, which I don't think will happen right now. But part of it was also to mirror what they did with the Bitcoin spot ETF, which is, I think it's only, you can only come in with cash. It's only cash redemption. You can't come in with ETH and create new shares, which was the same thing we saw with Bitcoin. So I think part of it is they're amending so that it just matches what the Bitcoin one was. And now it's just up to the SEC to go, is ETH more like Bitcoin, or is ETH, a security, and therefore we have to regulate this differently?
Well, I'm sure they'll find a way to throw a spanner in the works somewhere. But
my opinion is they're going to make all these companies run around and refile and refile and refile, and they're still going to approve it, because in an election year, this is not a place that the administration needs to pick a fight. They have plenty of fights coming up. They don't need it to be the SEC and crypto, and they certainly don't need during you know very well that if the SEC denies this, BlackRock and Fidelity and all these companies are going to sue, and the current administration does not need that narrative of we're spending all these taxpayer dollars on these lawsuits against these companies, and the SEC keeps losing it. And the courts have shown over and over again that they don't approve of what the SEC is doing. And so they're going to approve it, I think. They're going to make everyone jump through hoops to kind of show that they still have some level of power. But I think for all intents and purposes, it's a done deal.
So, Adam, while we're on the SEC side of things, our old friend Hester Pierce, she's still planning a push for a token safe harbor plan. Is there any meat to this? Is there, I know she put out a white paper or a proposal and stuff a while ago, but what do you think? Is this a good kind of process that she's trying to introduce?
I think so. And she's been talking about this for maybe 4 or 5 years, about having a sandbox and this process to where you can go from centralization to sufficiently decentralized to be able to launch your token, because Hester Peirce is very big on the SEC trying to appreciate and help with that innovation that there should be, and not always pushing against it. And she keeps talking about it, and you see her every time the SEC denies something, or anytime the SEC comes out with something negative, she's usually on the other side with her opinion. And I think there's a whole lot of merit to it. I think she sees the innovation in crypto. She sees that it doesn't fit neatly into any of the boxes they already have, and there needs to be more regulation. There needs to be more legislation. Now, keep in mind, there's better than average chance that the administration changes coming up in this election. And I think that if we go to a GOP president, that Gary Gensler no longer has a job, and who's the one who's been talking about actually adopting and helping, crypto and digital assets, it's Hester Peirce, so who might be the new head of the SEC, right? So I think she's still pushing it, because even if it's not her, even if Gary Gensler, if just one person, one of the 5 board members gets replaced, we see the SEC flip to being more crypto friendly. So she's still going to keep pushing these things, because she knows that come January of next year, it might be the time for all of these new regulations and ideas to get pushed through.
And Gary hasn't made a lot of friends along the way, so she's definitely positioning herself in a more friendly universe.
Right.
So, Adam, come away from our main conversations. Let's have a little look at some of the cool technology and some of the not necessarily innovation, but some of the things that are kind of becoming a bit more streamlined, right? So let's have a look at Web3 payments. Visa, if you try and make some of these payments, it's not necessarily the easiest, right? Going from crypto to fiat and back and forth and whatever and such. So someone's popped into this mix, Transact, and they've kind of doing this in a nice fashion. This
So
is all good stuff. This is the stuff that gets me excited, because it's taking the pain point out of all these transactions.
right now the pain point is I have to go from dollars to crypto and then back to dollars to be able to spend it, which means a bank transaction, bank to crypto exchange, back to the bank, and then I can pay things, which is not the intent of crypto. It's not the intent to have the bank as the middleman again. So what we see with Transact and Visa, which is pretty exciting for me as well, is the ability to have crypto assets in my digital wallet, in my crypto wallet, and then I can use a Visa card to be able to pay for whatever I need to pay for straight out of that wallet, right? So this is what I call the ultimate off-ramp, which means I no longer have to hold my assets in a bank. If I want to be able to spend them, I can just hold them in a wallet and then go use a Visa card that's attached to it and go spend them. And that to me is also exciting, because again, here in the US, we don't need it as much, but other people around the world need it. So in the hypothetical situation I gave you earlier, I send crypto to my family who's in South America. They don't need to go to a bank. They don't need to put it in a bank anymore. If they have one of these Visa cards, they can just spend straight out of that wallet, and they've never had to go into their peso, which might be getting devalued. They never have to go into their currency. They never have to deal with their bank, who might say, we're not going to allow this transaction, or you can only put this much crypto, you can only convert this much crypto to pesos or whatever currency on a certain each day. So this ultimate off ramp is exciting, because it means this is the way that I can hold those assets without having to go back to the bank.
Perfect. I like it. And another one in our universe is PayPal, right? So PayPal had started their own stable coin. We've talked about this over the last several months as well. But they are now, PayPal Ventures is now using that stable coin for investment in other platforms, right? And to name one is Mesh, right?
Right. So they invested in a company or a project called Mesh, but they did it they invested $6.5 million, but 5 million of it was their own stablecoin, PYUSD. Now this is exciting, one, because it's PayPal investing in a company, in a crypto company. That's step one. Step two is PayPal invested in the crypto company and used their own stablecoin to do so. Right, which on one hand is PayPal just saying, look, we want our stable coin out there in the market more, because we want more, we want it involved in more protocols. We just want it to be more valuable, more people wanting to actually utilize it. But the other important part of this, Mehdi, is we just talked a moment ago about the ultimate off-ramp. This is the ultimate on-ramp for Mesh, because it means now they've raised this money. They have $5 million in a stable coin that sits in a wallet that they don't have to go to the bank with. Mesh, I'm going to guess, because they're a crypto related company, has people distributed all over the world. They're a crypto native. They're going to be able to pay those people if they want to in crypto. And it's going to be a stable coin. So it's not like it's necessarily going to be something volatile. They can pay their people. They can maybe pay some of their bills using the stable coins, and they don't ever have to put all that money into a bank. So now you have on one side the ultimate on ramp, which was PayPal creating their own stable coin and then using it for an investment. And remember, every PYUSD is backed by a dollar. So it's not like they just created it out of thin air. They're all backed by a dollar. They use that stable coin to invest in Mesh. Mesh can then use it to hold on to pay their bills, to pay their people, whatever they need to do. And then if those people have that transact card we just talked about, you have employees for Mesh that never have to touch a bank.
That sounds fantastic. And Adam, one of the things I'm glad you clarified is that every stablecoin issued by PayPal is backed by a dollar, because we've obviously seen over the last several years some of the things that weren't necessarily fully backed by a dollar. So the investments didn't necessarily hold true. So, yeah,
That's
Adam,
a really important point. Paxos is managing that for PayPal. And yeah, everything's backed by a dollar. So again, not just created out of thin air, not like PayPal's generating stablecoin based on the number of sales they make or something. It is a dollar in, a PayPal token gets minted.
That's it. So there is validity to the investment. So, I want to stand by that. Adam, as always, thank you so much for sharing your thoughts on crypto and crypto assets, digital assets
Glad to
even.
be here, Mehdi. Thank you so much for having me.
And everyone, don't forget to check out interaxis.io. And until next time, thank you for watching and good luck investing.